And good afternoon, Georg.
Good afternoon.
It's very nice to have you back a year ago. My initial question was that I wanted to check some of the facts, whether you still remember them from last year, if that's okay with you. How many car carriers do we have in the world? Who still remembers that from last year? It's not a big change. 700. So we are talking about the car carrier market, a niche market, certainly with 700 ships only, in a very interesting market. And I can only recommend you get your banking online tools ready, because at least after this interview, I'm sure you will be convinced to buy some stock of Graham Car Carriers. Georg Whist is the CEO of Graham Car Carriers, the world's third largest provider of tonnage in the car carrier market. We are going to talk about GCC, of course. We're going to talk about the market in general and what investors have to expect from Graham Car Carriers. Georg, a year ago, we talked about the car carrier market, and a year is 365 days. What have you done? Tell us about the last year and what has driven and kept you busy, actually.
No, it's been a very busy year. When we were here last year, we were just starting to capture the upcycle that has started. Actually, you said 365 days. So in that 365 days, we have booked contracts worth $575 million. So that means every day we've been adding more than $1.5 million of revenue backlog. So we've been fairly busy. We've also listed on the main board of Oslo Stock Exchange. We also, in June, made our stock available to US investors on OTC Express market in New York. So right now we are pretty much getting sold out. We have 2 more ships to charter, and the market is holding up. So we're having very good discussions with our dear clients, and we'll be coming to all of you and all of our followers with news over the next weeks and months. And then we will be even more predictable on our dividend distribution. We will show you a bit later. We are quite simple, maybe to some degree a bit boring. We have a very, very visible, stable cash flow, and we pay out quarterly dividends. We have increased it now to 75%. So yes, for our people also that follows us and follow our research analysts that follow us, they all predict that next year there will be a 22% dividend yield on our current stock price. So it's not so bad. You get a check every quarter, and investors seem to like it.
22% dividend is not very often seen in shipping. With a relatively, I understand, stable outlook for the next couple of years, how long are the charter contracts you enter into?
Yeah, so typically now we do 5-year contracts. So the visibility is great. On average now, the rest which is outstanding under our contracts is just under 4 years. So, you can sleep well, collect your money, and enjoy this very good ride in the car carrier market.
Counterparties. Is this about how many counterparties? Who are your counterparties? That's important, obviously, for your business model.
No, absolutely. I think it's very important. We do have a couple of approaches to counterparties. First of all, it's quite diversified. We have 20 ships, 13 different counterparties. And they are all the big operators of the world, the 3 large in Japan, a couple in Korea, some in Europe, all sort of, sitting on really good contracts with the car manufacturers. And we also, on quite a lot of them, we have what is called staggered rates. So we get higher rates in the early years, and then it tapers off. So we also de-risk in that manner, as well as getting cash earlier, so we can also then pay off debt earlier in the cycle, and also now with a high interest rate, save money there. So
when you say you pay out 75% to your shareholders, that the 25% is then to pay down debt?
Correct.
Yeah. Okay, understood. Tell me and I think that's also important to note, that your counterparties are those who are operating the ships, who are transporting the vehicles, and their counterparties are the car manufacturers, so the Toyotas, not just, we could mention everyone, yes,
yeah, exactly.
yes. And the main car manufacturing market right now is in Asia, and that is then cargo which goes from Asia to Europe and to the US. Is that right? And is there also cargo back? Shall we maybe? There's one slide we have prepared. Could you put that on?
It's at least there's one sort of clear, simple message I would like to share with the audience, which really explains the whole car carrier market, and that is the one at the top left for the audience, and that is Asia to the world. That is what sets the demand for car carriers. Is all the export of cars from China, Korea, and Japan, and to some extent Thailand, to the world, because everything else is backhaul trade. And that cargo base have grown 37% since 2019 with zero fleet growth. So of course, what happens then? Magic happens. Then we get fantastic rates and we get longer contracts, etc. But the key takeaway for you there is really think about car carriers as export from Asia to the world, and that drives the whole picture. And of course, it's China, but it's also Japan and Korea keeping their market share and also slowly rising.
And there's some, I must say this as a German, there are some German car manufacturers who are producing here, and then you are also transporting their cars, I hope, right?
No, of course, we take, of course, the European produced back to Asia, and also there are, as people maybe not realize, but there are a number of Western brands being produced in China, Tesla being the largest, but also BMW, Volvo, General Motors, etc., which produce a car in China and are sold in the world markets, maybe believed to be produced somewhere else, but they are actually produced in China.
And China is one of the, of course, key words for me here, because we are reading in the news that the European Union at least is considering to somehow push back a little bit or decrease the amount of cars being exported from China, at least to the EU. That's what they can do. Is that an issue for you? How do you see that?
Oh, it was Ms. von der Leyen who a couple of weeks ago said she would like to investigate if the Chinese were subsidizing their EV export. I think it's a complicated picture. What we do know is that the Chinese brands are selling their products in Europe at 30% higher prices than they're doing domestically in China. So I struggle a bit with the subsidy argument. I think it is predominantly, in my opinion, driven by French and Italians, because Stellantis and Peugeot have not really been successful in China. So there is more of a one-way cargo stream. The three big Germans, they are actually making 30 to 50% of their profits in China. So I think they are a bit more, they're not so keen on this investigation. So it will be interesting to see how that transpires. But in any event, if these mega changes are to change, this will take many, many years for it to change. And people should not forget that 80% of all batteries for cars are produced in China. So there's a natural reason why you have your assembly plants in China.
Let's talk a little bit about the order book. You said 2019, when this steep increase started, there was zero new building activity. We just saw in the presentation before there is a little bit of new building activity. What do you see there, and what do you do in this respect, and what impact does it have on your business?
So if you can have the slide back up, there's some quite an interesting graph you will see at the bottom left here. Here, what we have done is that we have looked at all the AIS data for all car carriers departing from the Far East, and that's your bottom line. And then the top line is the export data from the same countries. And you see there is a gap. What does this mean? Well, it means that there is more cars being exported from this region than what is available capacity. And how is that possible? Well, it leaves on suboptimal solutions. It goes in container boxes. It goes on bulkers. It goes on high and heavy vessels. And so just that little differential there is a demand of 40 car carriers, just alone that little market. So already we're starting with a minus, let's call it 30, 35 vessels before we even start eating into the new building order book. Then we have CII, each one knot. It's 25 ships tying up. Then we have some really old ships, and also the demand growth from consumers are coming back. World sales of cars haven't really come back. So each 5 million of increased, that's another 27 car carriers. So when we just add that all up together, the entire order book is actually spoken for and could also potentially be a bit small. And then you start thinking, well, what are we not getting? Well, China has gone from less than 1 million cars of export to this year 4.5 million. If you take the 700 fleet, which we talked about half of that is controlled by Japanese operators. About 200 ships are controlled by the Koreans, and the Chinese, 15 ships. So, you know, the Chinese will and are building up around Costco, around BYD, around Cherry Automotive. These three companies will be coming up and, you know, will actually need close to 200 ships among them to carry the Chinese export, because the Chinese are not going to accept that their cargo is getting carried by foreign carriers. So this is a very, very natural evolution, the way we see it. And that's where you see up there, it's hitting more and more the popular press. You can read more and more about car exports, car carriers. There's an article in FT up there. So this is happening and evolving just in front of us.
It's all much too good. It sounds much too good to be true. Actually, I'm still fishing for some issues to your business model, at least for the next 5 to 10 years. Maybe we find it. How do you actually grow your company if you pay out 70%, 75% to your investors? By the way, the two major investors of GCC are two German companies who are active also in the container business, so they may benefit not only from nice dividends but also from transporting, at least as long as you haven't ordered enough new buildings, your cars actually, otherwise which would end up on your ships. But no, how do you grow your company? What's the growth story?
Also, we are extremely disciplined when it comes to capital allocation. We will only, invest when we can keep our dividend per share neutral or positive. If it turns out to be a negative dividend per share, then we're really stealing from existing owners. We will not do it. So this summer is a very good example. We sold one of our smaller ships, built 2010. And then we bought a 5,000 unit vessel, which is more than double the size, built same year at a lower cost. So it demonstrates that, you know, there are no holy grails. There are prices we sell at, there's prices we buy at, always with the investor in mind, creating value for all our investors. So we will keep on looking, keep on calculating, keep on negotiating. It might be a new building, it might be second-hand. But, you know, it's difficult in good times because everyone makes good money and everyone likes their own ship a bit better. So it's always difficult to find that transaction point where both people are happy.
Yes, what is very interesting is that it's such a small market, not very fragmented. Are the entry hurdles to new players also higher than for other segments? Is that a fair statement?
Well, it is. I mean, it's not moon landing or anything like that. But you know, the car is a delicate finished product. It needs to look new. It needs to smell new, and it's really, you know, from a tonnage provider point of view, when we are picking up the cargo at Toyota and bringing it to the United States, for instance, we are really doing that on behalf of K-Line or NYK. And because we worked with them for 40 years, they know that when they have a contract with us, we will deliver the quality that and the stringent measures set by the car manufacturer. So it's track record, and, you know, without track record you don't get contracts, and then of course there's chicken and eggs. So if you try to entry, you don't have a track record, so you probably have to start at used car and build yourself up, and this takes time. So there are sensible barriers to entry, but as I said, let's not exaggerate it. It's not moon landing either.
I see. I'm still struggling. It is obviously a very boring business model. You earn a lot of money with a very stable income. And how boring must your life be? Tell me, what do you do at 10:30 in the morning in Oslo?
Then we are hard at work, but now it's more normality. So actually we don't now work every weekend. We can have the occasional weekend off. But Yeah, but boring is good. You know, it's there is a lot of excitement in the world. Boring is good. You get your check. You know, yes, it's exactly what I calculated. It can be calculated very precisely. So, and if it's today's share price, if the analysts are right, it's more than 20%. I think it's quite interesting. With everything is booked, so I think compared to other shipping companies and many others who trade spot, I mean, the graphs when you see these projections, this is not just projection. This is the way it will be. It's sort of almost set in stone. So it's boring, but it's a nice boring feeling to get those checks in from the bank every quarter.
I think that's maybe a nice statement to conclude this interview, Georg. Not a boring CEO, but a CEO with a very interesting business model. I hope you didn't find our little conversation boring as well. Thanks a lot, Georg. All the best, and maybe see you next year here again on stage.
Yeah, absolutely. And if you can have the slide up again, I'll just remind the audience. So you see the revenue backlog there. We have 2 more ships we will conclude over the next couple of years. I will add on top of that, but this is booked, and then you can take $7,000 per day in OPEX, and then you calculate, and you know what check you will be getting in the next quarter. So very simple business model, and a little bit boring, but predictable, stable. It's also okay. So we welcome everyone to be a shareholder, of course, and if there's a question, just you know, come over, and we are here these couple of days, so we're happy to discuss with everybody.
Very good. All the best. Thank you very much, Georg. Georg Whist.
Thank you.
PCC.